Hi, my name's Adam and welcome to the channel. Today we're going to go through building a credit score. So whether you're just starting out on your credit score or into it and need to rebuild your credit score, we're going to give you some tips and tricks to build up your credit score to above that 750 mark in the next 12 months. So if you follow our tips, you're going to get to that 750 mark in the next 12 months, which will allow you to borrow money at a preferred rate from most lenders. If you haven't already, make sure to subscribe to the channel and also hit the notification bell. We release a new video every week. This month, we're doing a mini series on your credit score. Next month, we'll do a new mini series on a new topic, yet to be determined. And if you haven't already downloaded our Retirement Ready ebook, it's free to download, link below. So let's get started on how to build a credit score. So the first tip is make sure you monitor payments. So again, we've covered the last few weeks. You can go to Borrowell or Credit Karma to get a free credit report. Make sure that everything on there makes sense. Make sure that your payments are there. There's no extra information there that shouldn't be there. If there is, that means maybe that your credit score has been compromised. So always monitor your payments to make sure that they're going through on time, that they're all showing there, and that there's not extra credit there that you're not using, because that means that you've been compromised. One thing you always want to make sure you're doing is paying off the minimum payment. Ideally, you want to make full payment every month on your credit cards, but at least hit that minimum payment and make sure you get the payment on time. If your payment date is the 10th of the month, don't necessarily pay it on the 9th or the 10th, because it can take a few days to process depending on what bank you use. So make sure you give yourself enough time to pay it off so that it's received by your credit card company long before your payment date due. Another tip that a lot of people don't realize is not using your full credit limit. So let's say you have a credit card with a $10,000 limit. You don't want to be using more or carrying more than 35% of that credit limit. So that means that if you're unable to pay off your credit card every month, don't let that limit or the amount that you're using pass $3,500, because that means that you're tipping that 35% scale. You want to keep your use of credit limit below 35%. Now, if you have a $10,000 limit and you make a purchase up to $10,000, but you're paying it off, that's fine. And that actually helps build your credit score because you've used credit and you've shown the ability to pay it off. But don't carry credit card debts that are over 35% of your overall limit. Something we touched on last week was length of credit. So having history and length of credit really matters. So that's not necessarily how long you've had credit cards as a whole. It's how long you've had a single credit card, or a single car loan, or a single mortgage. So we always recommend when you turn 18, apply for a credit card, use it sparingly, pay it, use it to pay for something, but make sure you pay it off right away. So start using it slowly, but you're starting to build history with that credit card. So find a low fee or no fee credit card. And that should be a card that you hold on to for many, many years. So even if you apply for something that maybe has more benefits down the road, keep that original card, because that builds up your history of credit. So if you apply for a card when you're 18, and then when you're 22 and you get a full-time job and you want to get a card that maybe gives you some more flight points or whatever it is, apply for that, but keep that old card, because if you get rid of that old card, your credit history is now brand new again. Even though you've built some credit score in the past, the history is now decreased. So keep those older cards, keep them in a safe in your house, use them sparingly. If they don't have an annual fee, there's no harm in keeping it. Just be aware, make sure it doesn't get compromised somehow down the road. So that's, again, going back to the very start of this video, why you want to monitor payments on all of your credit. One of the other big factors that will really hurt your credit score is applying for credit all the time. So don't go out and continually apply for credit. I mentioned it in the previous video, walking around at a Canucks game one time here in Vancouver, and people are just lined up for these free credit cards where you get a free blanket or whatever it is. And if you do that too many times, every time you do that, it hurts your credit score. If you do it too many times, it can actually affect your credit score to the point where you can't get credit cards, mortgage, car loan, that kind of thing. So don't do that to yourself and to your credit score. So don't apply too often for credit, just when you need credit. If you're going out to kind of shop for credit rates, Let's say you're going out to buy a car and maybe you go to 3 or 4 different dealerships and they all pull credit because you need to do a car loan on that. Anything that you pull within 2 weeks will kind of lump into one. So it's not going to hurt you short term. The credit agencies will lump those credit pulls into one pull in general and will not decrease your credit score for every single check. So that is one thing. If you do it in the short term and it's kind of in the same area, i.e. car dealerships, it will not hurt your score long term, but you don't want to be doing that too often. So if you're coming up for a mortgage renewal, or you need to get a new vehicle and you know you're going to do a car loan, 6 to 12 months leading up to that, don't go apply for a credit card or anything else. Be aware of what you need to do down the road as far as what you know, and then plan ahead for that. So I want to go back quickly on hard hits and soft hits. So hard hits affect your credit score, soft hits do not. So examples of a hard hit would be a credit card application, employment application, rental application. Those are going to affect your credit score when you apply. A couple examples of soft credit hits are when you request your own credit score, again, through Borrowell or Credit Karma. Those do not affect your credit score. The other one is if you have credit with a lender already. So let's say you have a mortgage with Scotiabank and they need to update your credit score there, maybe you're renewing for that, that will not hurt your credit. So if it's with an existing borrower or lender, that will not hurt your credit. It is considered a soft pull. So the last tip on how to build your credit score is to have different types of credit. So have credit cards, have a car loan, have your mortgage, have a line of credit. Have these credits available to you, but remember, go back to that 35% rule. Don't use more than 35%. Obviously, your mortgage is going to be a bit of an anomaly here and it's calculated differently, so don't worry about that one. But if you have a $50,000 line of credit, don't use more than 35% of it. Same with your credit cards. Pay off your car loans as fast as you can. But have multiple types of credit because that helps build your credit report. So there's no harm in having them, but make sure it's part of your financial plan and that you can manage the payments on that. We come across clients all the time in our office that have $10,000, $20,000, $100,000 in credit card debt. They've let it get out of hand. Make sure that if you're applying for credit, unless it's a short-term emergency need, if you're applying for credit, it's something that you can manage and pay off every single month, or in terms of mortgage or car loan, that you can make the minimum payment or the required payment every single month. Thanks so much for watching this video. We hope you have a better understanding on how to build your credit score, both short and long term. If you follow the tips that we gave you in this video, I can guarantee you that your credit score will have a big boost over the next 6, 12, 18 months, to the point that you can really repair a bad credit score that you've maybe done to yourself in the past. A reminder that we have a free ebook on retirement ready. Click the link below to get that free ebook. And if you haven't subscribed already, make sure to do that and hit the like button. Thanks for watching, and we'll see you next week.